Looking back, 2023 was a bit of a turning point for uranium, as our guest now today tells us that it's been a bit of a period of a nuclear renaissance. It's Tom Bailey from HanETF. Tom, welcome. We've spoken before about ETFs that HanETF provides, and we'll take a look at the ETF we're referring to in just a minute. But I want to get a little bit of background, first of all, on what was the catalyst that turned things around last year for uranium.
Sure. So, I mean, it's been on the cards for several years now, this idea of a nuclear renaissance, but I think we really saw confirmation of that last year. A key turning point really was end of last year when you had at COP28, nuclear energy taking center stage again as a form of low carbon but reliable energy. So you saw 22 countries, including the US and UK, at COP28, commit themselves to tripling their nuclear energy capacity by 2050, based on the idea that really, if you wish to decarbonize energy, if you wish to reach these net zero goals, nuclear energy plays an essential role in that. Renewables will play a role, but for that base load reliable energy, which is to not come from hydrocarbons, coal, etc., you need nuclear energy. And there's really a real recognition of that from countries around the world, including the US, UK, but also Japan. And so we saw, with this very positive news outlook for uranium, the price of uranium itself respond to this. So we saw the price of uranium its spot price rise from about $48 per pound at the start of the year to end of the year at $91 per pound. So a very strong performance on the price of uranium, based on this basic idea of increased demand for uranium going forward to supply nuclear energy, which is coming back on the agenda, as I mentioned, and at the same time the increasing troubling supply dynamics in terms of a lack of supply.
Well, let's take a look at that balance then and work out where uranium comes from and what the supply side is looking like, and this idea that demand is going to continue to rise. Explain more about where the uranium sourcing is and some of the political dynamics as well, I guess, that go on around all this.
Sure. So, I mean, the starting point really is that if you can remember back to 2011 when you had the Fukushima incident, you saw nuclear energy fall out of favor based on the back of that accident. Attitudes on that have reversed, but over that decade, it was sort of a lost decade for uranium producers because you saw countries such as Japan and Germany turn sharply away from nuclear, and other countries also reconsider their commitment to nuclear energy. That led to this lost decade in uranium. There was underinvestment in mines. And then, but by the end of the 2010s, you start seeing a kind of pickup in interest in nuclear energy again. But because of the lack of investment in these mines, we're going forward into basically a real lack of uranium to supply the projected demand. So you had this underinvestment, and at the same time, in 2023, you had certain geopolitical events. You had the coup in Niger. Niger is one of the is a notable uranium producer, not the largest by any measure, but a notable uranium producer. Decides to this new government following the coup decide to potentially restrict the sale of uranium, particularly to France, who it doesn't have great relations with. And then at the same time, we started to see some of the big producers. So the world's biggest producer, Kazatomprom, a Kazakh-based company, it's kind of really the OPEC of the uranium market. This year, it's had to announce that it's going to cut its production guidance by 14%, and also say it's unlikely to reach its 2025 targets. So what we're seeing is this real lack of supply at the same time as this real pickup in both current demand and potential demand, which is feeding through to that high spot price of uranium, which this year reached the $100 mark to $106 per pound.
Yeah, I'm interested in this point you mentioned about the rethink around nuclear. As you say, a renaissance. That's a really good description, actually, because it has come back. And we had originally had all sorts of nuclear plants around the world. You correctly mentioned the Fukushima incident and Germany's move into green, with the green politicians steering away from nuclear. But we have now begun to see the light, I suppose, in some respects. What is it that's changed the environment for this? Is it the fact that we now know that we've got to steer away from old fossil fuels, which essentially gives us this green element? Or is it the fact that we've now realized that, in fact, renewables don't work the way that people perhaps maybe thought they might do, and we've got to find another source? Politically, what is it? What's changed the appetite?
Yeah, sure. So I mean, there's still large commitments to renewables, but I think there's a kind of growing recognition that the intermittency around it, renewables, whether it's solar or wind, is still a major issue in terms of, when the wind's not blowing and the sun's not shining, trying to plug that gap of intermittency. The big kind of solutions in terms of, say, battery storage are out there and being worked on, but they're still not at scale yet. And that kind of puts a cap on how much an energy grid can actually deal with these intermittent sources of energy without major disruptions to supply. And therefore, you have this kind of growing recognition of nuclear solution. And then the other aspect too, away from the climate aspect, is really the energy security argument, which we saw after 2022 with the invasion of Ukraine by Russia, is that energy security became back on the agenda. Relying on imports of gas from Russia was no longer possible for Europe. And then also then for those countries which weren't necessarily relying on Russian gas, but were buying gas from the international market, the vulnerabilities that exposed to in terms of the spike in price, and that being part of the energy security desire is obviously having stable energy prices. And so one interesting stat to consider, which I think is helping with the priests interested in nuclear energy, is that if you take a gas-fired power plant, around 70% of its operating costs are the cost of the fuel itself, i.e. the gas. So when you see those big price spikes of gas on the back of such geopolitical events or whatever it could be, that really feeds through to the end energy used for consumers. Then if you consider a nuclear power plant, its fuel costs as a percentage of its total operating costs, so somewhere between 4 and 8% depends on the plant, which means that nuclear energy is much less vulnerable to those supply shocks, to spikes in prices. So that's also driving the agenda in terms of governments committing themselves to nuclear.
Yeah, let's take a look now at the investment opportunity around this. I mean, at HanETF, you are supplying ETFs through onto the IG platform. Where should we be directing our resources in terms of research, and what ETF should we be using to cover this opportunity?
Sure. So around 2 years ago, we launched a Sprott Uranium Miners UCITS ETF. That's had lots of demand. It's a broad uranium miners as well as a spot price of uranium ETF. But at the end of February, we'll be listing a new ETF, again with Sprott, the Sprott Junior Uranium Miners. And this is focusing instead on the small, mid-cap, junior section of the uranium mining market. Not because we think the large cap and section of the market is something not to consider anymore. But what we've seen is increased investor interest in these smaller names within the uranium space, and there's several reasons for this. So the first being the fact that a lot of the small uranium producers, these junior miners, they needed the price to get somewhere about $80, $90. It depends on which company itself, so we can't say specifically. But with the uranium spot price now about $100, it's become economical for these small producers to either restart production or to start production afresh if they've not yet to break ground in terms of their production. So a lot of investors are seeing the junior section of the market as somewhere to be. And at the same time, in terms of the bull market we've seen in the price of uranium, the juniors have much more potential to participate in the upside, potentially than the larger cap players. And that's because some of the largest producers of uranium in the world, they will have already contracted for their future production at a certain price before the price of uranium spiked up to $100, and whereas the junior miners won't have done that, and therefore they're better placed to sell into this higher price market and benefit from that. So that's what we kind of see this increased demand for the juniors, which is why we're launching the Sprott Junior Uranium Miners UCITS ETF. It's ticker URNJ.
Yep. Okay. Look, Tom. Time has beaten us. Thanks indeed for joining us, taking us through the opportunity for investment in uranium using ETFs. And that's Tom Bailey from HanETF.